Wall Street shocked by new tariffs on imports. On February 3, 2025, President Donald Trump announced the imposition of new tariffs on imports from Canada, Mexico, and China, citing concerns over illegal immigration and drug trafficking. This move has sent shockwaves through Wall Street, leading to significant declines in major stock indices and raising concerns about the broader economic impact. Details of the tariffs. The newly announced tariffs are as follows. Canada and Mexico. A 25% tariff on most imports from these countries, with a reduced 10% tariff on Canadian energy exports, including oil, natural gas, and electricity. China. A 10% tariff on all Chinese goods entering the U.S. These tariffs are set to take effect on February 4, 2025. Market reactions. The announcement of these tariffs has led to significant declines in major stock indices. S&P 500. Futures for the S&P 500 tumbled 1.5%, indicating a sharp decline at the market's opening. Dow Jones Industrial Average. Futures for the Dow Jones Industrial Average fell 1.2%, reflecting investor apprehension. Nasdaq Composite. Futures for the Nasdaq Composite dropped 1.6%, highlighting the broad market impact. These declines have been attributed to investor concerns over the potential economic impact of the tariffs. Concerns include increased costs for businesses and consumers, potential retaliatory measures from affected countries, and disruptions to global supply chains. Sector-specific impacts. Certain sectors have been particularly affected by the announcement of the tariffs. Automotive industry. Stocks of major automakers, including General Motors, Ford, and Tesla, experienced significant declines due to concerns over increased production costs and potential retaliatory tariffs from affected countries. Technology sector. Chip stocks have fallen following the announcement, reflecting concerns over supply chain disruptions and increased costs for technology companies. Analyst perspectives. Analysts have expressed concerns about the broader economic implications of the tariffs. Goldman Sachs highlights the potential negative impacts on stocks following President Trump's announcement of tariffs on countries with significant trade deficits with the U.S., including Canada, Mexico, China, and possibly the European Union. Large tariffs could lower S&P 500 earnings estimates by 1 to 2% for every 5% tariff increase and reduce expected returns. UBS Global Wealth Management. Mark Haffala, Chief Investment Officer at UBS Global Wealth Management, notes that the tariffs are likely to generate volatility in the markets until there is greater clarity on U.S. trade policy. Global market reactions. The tariffs have also affected global markets. Asian markets. Asian markets closed lower, with notable drops in Japan's Nikkei 225, South Korea's Kospi, and Taiwan's TAIEX index, reflecting investor concerns over the potential global economic impact. European markets. European stocks also fell, led by declines in the FTSE 100 and Stoxx 600, as investors reacted to the escalating trade tensions. Potential retaliatory measures. In response to the U.S. tariffs, affected countries are considering retaliatory actions. Canada. Prime Minister Justin Trudeau has announced a 25% tariff on a range of U.S. imports, valued at approximately $155 billion, aiming to counteract the economic impact of the U.S. tariffs on Canadian industries. Mexico. Mexico is expected to implement its own tariffs on U.S. goods, further escalating the trade dispute. The recent imposition of tariffs by the United States on Canada, Mexico, and China has introduced significant uncertainties into global financial markets. The declines in major stock indices, particularly in the S&P 500, Dow Jones Industrial Average, and Nasdaq Composite, reflect investor apprehension about the potential economic impact of these measures. The situation remains dynamic, with potential for further escalation or resolution depending on the responses from the affected countries and the broader international community.